Okay guys, we're going to go to the Traders Clinic and look at the Ask Scruff. So if you bear with me, let me just fire that up. Just flick this over. Pull that into shot. Excellent. Come down here. Oh, fantastic, me coffee.
There you go.
Thank you, my dear. Get your reward in heaven. What we're looking at here is for Lee. Little salute to you, kid. Morning Scruff, is there a way we can check the strength of gold US? Would it be the strength dollar and what time frame? Right, okay. It's not quite the same as doing a strength of a currency. Let me kind of explain why. When you're doing a strength of a currency, it is always the same, some ratio or some zero. It means there's got to be a buyer and a seller for one. Gold in the US are correlated. So when you're looking at, say, spot gold, which is here, there is a correlation between spot gold and US. In other words, it's priced in dollars as opposed to buying one to sell the other. It's slightly different. So what you would do is you would come up here and you look for a correlation between the two. In other words, if one's moving up, the other one should, in theory, be moving down. That's kind of roughly the way it works, okay? Whereas this would be, well, if the euro is buying, the dollar is selling, sort of thing. So you've got to sell the dollar to buy the euro or sell the euro to buy the dollar, whichever way you want to look at it. Now, a correlation is here, and what you would do is you look at the hourly there. The good indicator is the USJPY, so sit it on the USJPY. That's a good barometer of what the dollar is doing. And then sit gold above it, and then as gold has come down, the dollar has gone up. In other words, that's increased in value, this is decreasing in value, and then likewise you'll be looking for it to change around. So that's the way I would do it. I would do it through a correlation of baskets. Now this particular window of the world is set up in such a way that I can see things at a snapshot. Now ideally all of the indices should be running in the same direction. So you've got that up, you've got that up, and you've got that up. Then you have down here, you've got your correlations between the US dollar. So you can start looking to see warning systems across, and then I've got a wild card in the corner of oil. But this is what we'll be looking at this period in time. So if that's going strong, that should weaken off and vice versa. Hope that makes sense. Catch you soon.